Good morning. Your Excellencies, ladies and gentlemen, our 450 distinguished guests, honorable speakers, I'd like to welcome you to the second Middle East and Africa FinTech Conference. We're looking for an exciting and innovative day today. Before I start, let me share with you a statement I read 20 years ago by Bill Gates. We need banking, we don't need banks. This statement has stuck in my mind for many, many years. As a banker and a technologist for 35 years, I have seen how banking transformed lives, societies, and banking. I concluded we need banking to continue to transform our societies and our lifestyle. I've also concluded we don't need banks. Let me start. And our word today. Ladies and gentlemen, it is not business as usual. Yesterday was predictable. Today is dynamic and exciting. Yesterday was stable, routine. Today about learning new skills, agility, speed, flexibility. So FinTech has disrupted our world. We're living in a disruptive world. So today we are fortunate to have with us a very distinguished speaker from the industry. We're going to have an opportunity to discuss, debate, and also agree and disagree. Let me give you the highlight how FinTech have disrupted our 2017 and the years before. From my perspective, as a banker and technologist, I have seen that banks has shifted in mindset. They're starting embracing FinTech companies and start embracing more technology innovation. A few days ago, I got a call from the managing director of JP Morgan, Ali Musa, and I'm sure he's with us. And he said, Sael, I'd like you to meet our chief FinTech officer of JP Morgan worldwide. He's visiting the region, and I'd like to see him. I made time and saw him a few days ago. He is the chief FinTech officer of JP Morgan. He has in his organization a division called Innovation and Digital. He has 1,800 people. They're not IT people. He is not head of IT. He's the chief FinTech officer. Just one key word I learned from him, that he spent most of his time with the chief executive of JP Morgan and the chairman. And look at this transformation, the change of mindset. We have witnessed regulators have shifted gear from being a purely regulator, more to be a proactive innovation and supporting startup and FinTech companies. And we have seen it in Bahrain, the proactive approach by our regulator and by His Excellency, Rashid Al-Miraj, and with his competent team, how they're embracing FinTech and technology. And we are delighted that straight after my presentation, he will be with us. But please ask him many questions, and difficult one. We have seen venture capitalists voted in their wallet. Since 2010, $100 billion invested in financial services, in fintech companies, and mainly digital. $100 billion. Alone, 2017, it was 27.4 billion, 18% more than last year. This surge mainly coming from USA, UK, and India. Our part of the world is catching up. Very modest investment, 100 million the last 10 years, and look at this number. In 2017, 67 million in our part of the world investing in fintech startup. So we're catching up. Technology, innovation, disruption. We have created a new segment. Innovation and technology have allowed the newcomers, the challenger bank. And the segment is three things. They're focusing on unbanked, underserved, and uncertified customers. And today we are also honored to have the founder of Atom Bank with us and the founder of Bank Zero from South Africa. And they're going to share with us their experience. Banks are reacting, traditional and conventional bank. So what are they doing? They want to leverage on the infrastructure, on the banking license, on the banking system, and they're launching their own neobank, a digital-only bank. And the regulator are reacting for that. So 2017, venture capital, spending money, fintech, regulators more proactive, new type of banking, challenger bank, neobank. So it's been total disruption. Now, let's look at 2018 and my prediction as a banker and technologist. How do I see things? I'm so obsessed about fintech that is reflected in my son. A few months ago, my son sent me my birthday card. You can look at it, fintech, Bank EBC. I'm so obsessed about it. So that's obsession. I'm going to now share with you my prediction for 2018. Government will continue to make it easier for financial technology companies and digital highway. They're going to make it easier. They're not going to be the herders. And at the same time, I can see a global sandbox. I can see companies will be leveraging on a global and more collaboration between companies and using global sandbox. I would like to see more of that, and it was coming that government will be more collaborations. Our agenda for the digital banking will be dictated by our customer. Like Bill Gates said, we need banking. We're not going to dictate it. The customer expectation and customer collaboration. And they're going to dictate the way forward. We at EBC take this very seriously. We have conducted a survey recently in Jordan, Egypt, and Bahrain. Independent survey. And we asked one question. Would you switch to a digital-only bank? The answer is, look at this number. 63%, they actually will leave their own bank and go to a digital-only bank. Astonishing number. I am not surprised. The shift towards digital financial services will continue. According to Capgemini, they're predicting that 5 out of 10 customers in Europe and United States will be using digital platform. Digital bank, mobile, app. And in Scandinavia, will be 8 out of 10 customers will be the digital channel. We don't have the numbers for our part of the world, but we are catching up. Cashless payments will explode through this digital channel. Why? Because our customer, the new generation, want to use their mobile for payment. They want to use wearable, prepaid, digital prepaid. AFS and Patilco 2 months ago launched the wallet, the first digital wallet in the region, where they allow us to do payment. Quite honestly, I'm overwhelmed with a large number of subscription. The demand, I was not expecting that number. And not just a subscription, the utilizations within 8 weeks. So 2018, we're expecting 95 billion to be paid using this channel, the digital wallet and digital channel. While all this happening, artificial intelligence will find its way to banking, will find its way to every single function in bank. Credit scoring, brokerage, advisory, and AI is going to come soon to us. It's happening. I'll give you an example. A few months ago, I heard my son talking to the phone, speaking in natural language. Transfer money to my gym, pay my school bus. I thought he's talking to a friend. He's talking to his bank account. The bank in UK offering students the chatbot. You actually can talk to your bank. It's not a mobile banking, not a phone banking. This is the new generation. This is the AI generation. Let's go to the cloud. Cloud computing. Regulators reacting. Banks start placing their application banking system on the cloud. Why? For flexibility, agility, and lower cost. And we have also Joe Marish, I think he's going to talk to us about cloud computing. The most used buzzword in 2017 in fintech was blockchain. And I'm sure all of us agree on that. Blockchain and what? Bitcoin. Blockchain will make its way to real world because the banks already have no choice except to experiment blockchain. And I can tell you, we still need maturity in blockchain. Needs time. We have also a guest speaker from United States who is the author of bestseller of blockchain in the New York Times, according to New York Times. And he's with us here today. So what is going to happen to the 2 billion unbanked population? What's going to happen to them? Financial inclusion, very close to my heart. Fintech going to accelerate and going to speed up to include these people. I've seen it, and it's going to continue to happen. Fintech reached to Africa, Finland. I'll give you a quick example. Finland have 40,000 refugees from Syria. What they did, they gave them a smartphone from day one with top-up money, ID, and they just integrate them with the society. So fintech accelerated to reduce the number of unbanked population. Last year, the wild card was blockchain. Today's wild card is what? Open banking. What is open banking for bankers? We all connected to the web, media, social media, bank accounts, travel. All this data, ladies and gentlemen, called the big data. We're all connected to it. Connected through what? Something called API, Application Programming Interface. So all of us connected through this layer. And let me say what is API in a simple language. Look at API as you are sitting in a restaurant, pick the menu, place your order. You call your waiter, you place your order. The waiter come in, take your order, go to the kitchen, process your order. Comes back, deliver your order. So look at this kitchen as a global kitchen. You can not just order food, get information, travel data, financial data, analytics, and your waiter is your API. And this is where, in a simple, the API. Let me give you a small. Banks want to plug in. And let me just share with you a 1-minute video on the open banking.
Over the last decade, large and successful digital players in various industries have used open application programming interfaces, or APIs, to connect their services with apps and websites of third parties. Today, open API technologies have evolved to an extent that allows them to be applied by the financial services industry, where security is key. This opens up new opportunities for banks and other financial services providers to offer innovative digital services themselves. The emerging business model, open banking, empowers end customers to control and share their personal account data with third parties of their choice through offering a new range of products.
So what? Why we need open banking? Why banks need open banking? They need to enhance services offering. So you're giving your customer not just to look at his accounts, you can give him all exposure of data, travel data, personal data, analytics through the API. Banks will need increased digital revenue through open banking, open PI. Who's going to do all that? Let's just sit and rethink. Government spending and making it easier for fintech companies. Cloud computing, AI. Who's going to work with all this? Let's rethink. We have two camps. We have banks and fintech. And fintech companies are not making money. Banks not innovating. The only way is through collaboration. Why? According to Capgemini, a study, before I go to the why, 91% of banks want to collaborate with fintech companies. 75% of fintech companies want to collaborate with banks. Why? Because banks have capital, fintech have innovation. Banks have economies of scale, fintech have agility. Banks have customer data, fintech have better customer experience. So collaboration is the only way forward. Personally, I look at disruption as a catalyst for positive change. We should not look at disruption as negative. It's transforming us, transforming our lifestyle, transforming our society. So it is a positive change. The impact of fintech is positive change. We at AFS invested heavily in technology in our fintech platform. We're working with our partners, we're working with our regulators, and we see the future. We live the future, and we are part of the future. Let's seize today for this opportunity. Thank you very much.